resort. So as a banker to the bank, Reserve Bank also acts as a lender of last resort. So if no one is coming to the rescue of a commercial bank, then at last the RBI or the central bank will come to its rescue when it is running bank run, right? So what happens is it can come to the rescue of bank that is solvent but faces temporary, if there's any temporary liquidity problems, by supplying it with much needed liquidity when no one else is willing to extend credit to the bank, right? The Reserve Bank extends this facility to protect the interest of the depositors of the bank and to prevent possible failure of the bank, right? Which in turn may also affect other banks and institutions and can have an adverse impact on the financial stability and thus on economy. So if any bank, if any commercial bank is, you know, facing any problem of finance, that is if it is going through any loss, then what happens? It is not just a problem to that bank but to the whole economy, the economy of a country, right? The country as a whole is also a loser. The depositors are a loser. It is a chain, right? One commercial bank is a chain in the bank system, complete the entire bank system, right? So if this is failing, then it affects the entire country, right? Entire country's economy. So for this reason, the RBI will not let it fail, right? It will come to its rescue and help it, right? So this is how RBI is acting as a lender of last resort, and this is why the RBI acts as a lender of last resort. So banks may face a short-term or temporary liquidity crisis. So there can be some short-term or temporary crisis which arises out of mismatch between the assets and liabilities. Because of any mismatch between assets and liabilities, banks try to fill the gaps by going to the call money market. So if there's any temporary liquidity crisis, they go to this call money market. You all remember this call money market? And short, we also said that it is also called as short notice, right? So under
Yeah,
this, what happens? You need to just give a notice of 14 days, right? And you
yeah,
can get your money, right? So call money market functions normally when some banks or others have access and can lend to others. But if the entire market has a liquidity crisis, the temporary need may be felt by the entire banking system. RBI as a lender of last resort steps in to bail out the banks in need through the repo facilities. So what happens is normally during this temporary liquidity crisis, the commercial banks, they go for this call, they go to this call money market. But what if like the entire banking system, all the commercial banks are, facing any problem? That time what the RBI does, it comes as a lender of last resort, right? It does its function as a lender of last resort and it steps in to bail out the banks in need through repo facility. That is, it will lend the money to the banks through repo facility. And what is repo facility? This is the rate. Repo facility is the repo rate, the rate at which the RBI is giving loan to the commercial banks, right? So it is actually RBI can change this according to the need of the economy or the country. Right? It can increase it or decrease it according to the need. If there's not much requirement for the money in the economy, then it can increase the rate. If the economy needs more money, then it can decrease the rate. Right? So with this, we are done with this function of lender of last resort. Any doubts so far? Four
no,
functions we have done.
clear.
Clear?
Yeah.
So bank,
Yes.
what did we do? Bank of issue. The second point, banker to the government. Then
And
bankers
yes,
bank
and
and
then
lender of
lender of last
last resort.
resort.
What shall we do? Shall we continue with these functions
Okay, ma'am.
or continue?
No problem. No problem.
No problem. Okay.
Yeah.
So if you're following me, then I think we can continue this.
Yeah.
Okay. So the next point is controller of credit. So RBI also acts as a controller of credit in the market. So this will be the fifth function, right? So this
Yeah.
is the fifth function. You can make a note of all these points.
Yeah.
So RBI controls the credit. Credit is what? Money. Money, right? So it controls the credit in the economy. The central bank controls the credit in the economy. And how does it do? It has got various instruments to control, various tools to control, right? Those are actually you have a separate topic only for this, right? The next topic will be this methods of credit control. So here we'll be discussing this topic in detail, but here to just clear this point, I'll tell you a little bit here. So there are
Yeah.
those tools are repo rate, OMO, that is open market operation, then reserve requirement. Through all these tools, the RBI controls the credit in the economy, right? So the Reserve Bank of India is the controller of credit. That is, it has the power to influence the volume of credit advanced by the banks in India. So it has got the power to influence the volume of credit. How much money the banks, the commercial banks can lend it in the economy to the people. That is actually controlled by whom? Central bank, right?
Yeah.
It can do it with various tools like the repo rate, OMO, reserve requirement, etc. So, and also the rate of it. The rate is also actually controlled by RBI, right? It can do so through variety of instruments like available to it, like the repo rate, OMO, reserve requirement, etc. All its monetary policy tools have a bearing on this function directly or indirectly. So this point again we'll be discussing in our next point. The next, I think you'll get one question itself on this topic. So we'll discuss this in depth later. As of now, we'll move to the next point. The next function, that is the sixth function, will be agent and advisor to the government. So RBI is also acting as an agent and advisor of the government. So it advises the government on all the financial matters, right? RBI acts as a financial agent and advisor to the government. It renders the following functions. So what are the functions it performs as an agent and advisor? As an agent to the government, it accepts loans, manages public debt on behalf of the government. As an agent, what is it doing? It is accepting loans, right? Manages public debts on behalf of the government. It issues government bonds, treasury bills. So we have read about these, right? Government bonds, treasury bills. So all these are issued. All these functions for the government are performed by the central bank, right? And it acts as a financial advisor. So it also advises the government on the financial matter, acts as a financial advisor to the government in all important economic and financial matters. So all these are the functions performed by central bank as an agent and advisor to the government. So with this, we are done with the sixth function. Now we'll look at debt manager of the. Okay, this is also under sixth only. RBI as debt manager of the government.
Government.
Just a second. So we've seen what monopoly on issue of banknote. We saw setting of official interest rate, right?
Yeah.
Then government's banker. We saw how it is accepting the money for government and how it is making a payment. Banker's bank. How it is acting as a banker's bank, the head of all the commercial banks, right? Then the lender of last resort. We need to study these two, and actually we are talking about this point now. Government's banker, right?
Yeah.
Banker to the government. Okay, this point is done. Controller of credit. Okay, RBI is debt manager of the government. So one more function RBI does for the government, that is it manages the debt, right? So we just saw here debt manager. It accepts loans and manages public debts, right? So this point is only elaborated here. How is it managing the debt of the government? So the Reserve Bank manages public debt on behalf of central and state governments. It involves floating of bills and bonds, payment of interest, and repayment of those loans. So all these functions are done by RBI. Then RBI as a national clearing house. This is another function performed by RBI, the National Clearing House. In India, RBI acts as a clearing house for settlement of banking transaction. So it will act as a clearing house for settlement. That is, it settles all the banking transactions. This function of clearing house enables banks to settle their interbank claim, whatever interbank claims are there between the other commercial banks. Further, it facilitates the settlement economically. It essentially means the interbank check clearing settlement. Okay, anyways, with this, we're done with this. RBI performing function for government, right? Now we'll look at this custodian of foreign reserve. Okay, so under functions, see here we saw that one of the function is managing the country's foreign exchange and gold reserve. So this function we need to do, and the other one will be regulation and supervision of banking sector. Now we'll look at this foreign exchange thing. Custodian of foreign reserves, right? Foreign reserves is the foreign currency with the central bank.
RBI. Yeah.
Yeah. So RBI has the responsibility to act as the custodian of foreign exchange reserves. It takes up operations in the forex market, that is foreign exchange market, to stabilize the exchange rate of rupee and ensure that there is no speculation and there is order. So under that fixed exchange rate, right, we discussed that how the central bank can come and intervene in the forex market, that is foreign market, foreign exchange reserve market, right? Foreign
Yeah.
exchange market, and stabilize the exchange rate, international exchange rate, right? But what happens under flexible exchange rate? Can you tell me? So two type of
Yeah.
exchange rate system we saw. One
Yeah.
was fixed, the
Other
other
is
one
flexible.
flexible, right?
Yeah. Yeah.
So what happens under flexible?
Flexibility. It is upon the government.
Sorry,
Is it depends upon the government? No.
it depends.
Government.
No, no, no. Flexible is market. So here the
Yeah.
market will decide, right?
Yeah.
the demand and supply, that is the market will decide the exchange rate, but under fixed, the government or the central bank can come and intervene in the this system, the market,
Yeah.
and decide the exchange rate, right? It can change the exchange rate, it can influence the exchange rate, right? It tries to stabilize the exchange rate of rupee and ensure that there is no speculation and there is order. To be able to do so effectively, it holds forex reserves which it buys from the market. Which, so how is it doing it? It is holding the forex reserves which it buys from the market, which includes foreign currency assets. What are those forex reserves? Foreign currency assets, gold, IMF's International Monetary Fund, right? IMF's SDR, special drawing rights. So this is actually a virtual, not virtual currency. Yeah, kind of virtual currency. It is actually, it is also a kind of currency which is actually not used for day-to-day transaction, but it is only between the governments and the international institution called IMF, right? So since 2008, when dollar stability came under question, RBI has been increasing SDR and gold in its holding for greater security. Such diversification and hedging of risk is being done by all central banks, right? So now I've also told you that how as of now, right now, how we are having a good foreign exchange reserve, right, with our central bank. So this is the current status of our foreign exchange reserve, our countries. So now we're done with this. We're done with this point. Custodian of foreign reserves. So any doubts in this point?
No. No,
No.
ma'am.
Okay, so we're done with this point, right? This function. Then we look at supervisory function. So this is the last function of RBI, supervisory function. So it supervises all the commercial banks, right? It supervises and regulates the commercial bank. So RBI Act of 1934 and the Banking Regulation Act. So there was one another act in 1949, that is banking regulation. According to this act only, the bank is regulating the commercial banks. So 1949 have given the RBI wide power of supervision and control over commercial and cooperative banks. So both commercial and cooperative banks, right? Relating to licensing and establishment. How is it regulating? While controlling the license and establishments, branch expansion. So if any commercial banks or cooperative banks wants to expand the branches, then it will have to seek permission from central bank. Then setting reserve ratios. Reserve ratios are, I've told you, the part of deposits which the banks are supposed to hold it with the central
Sure,
bank.
ma'am.
So supervisory function. How is it doing it? By granting license to the banks. Again, the same things are written here. Inspecting banks. It also inspect banks. Implementation of deposit insurance scheme, whereby all deposits up to 1 lakh are insured. So giving insurance for all deposits up to 1 lakh. Then periodical review of the work of commercial banks. It also reviews periodically the work of commercial banks, giving directive to the commercial bank. It also gives directions, control the non-banking finance corporation, NBFCs, right? All these are also non-banking financial corporation. So these are also acting as banks basically, but they are non-bank. They perform some functions of a bank, right? So these NBFCs are also controlled by central bank, that is RBI,
No, no.
ensuring the health of financial system through one-site and off-site verification. Banking Regulation Act 2017 enables the Government of India to authorize the RBI to issue directions to the banks to initiate insolvency resolution process to recover bad loan. So a recent act, that is Banking Regulation Amendment. So we saw the first Banking Regulation Act came in 1949, right? Then after in
Yeah.
2017, it has been amended. It enabled it enables the government of India. It enables the government of India to authorize. So authorize the RBI. So government of India has now authorized the RBI to issue directions to the banks to initiate this insolvency resolution process to recover bad loans. So if there's any bad loan with any commercial banks, those bad loans can be recovered by central bank, right? Through this insolvency resolution process. So under supervision and regulation, that is it. I think we'll stop here. There are many more things actually given here. This will only be for your knowledge purpose, but from your exam point of view, I don't think you need so many things. All that you need to do in exam is just write these points and elaborate on these functions. How many functions you have? 1, 2, 3, 4, 5, 6, 7. 7 functions are there in total. You can just write one para on each function, right? So we've done this regulation and supervision of banking sector. Then there's one more function here in this book they've given, that is promotional functions, how it promotes the loans, money, promote savings, but this is actually not required. Debt management office. Okay, this is basically for that debt management. There is office created. So this is all actually not required. RBI's role in economic stability and financial stability. This is a role. We just saw how all these functions, through all those functions, how it brings in the economic and financial stability in the economy. See, through lender of last resort. That's it. So I think we're done. We're done with this point. Supervisory functions. That's it. So we're done with all the functions of central bank. So if there's any doubt, you can ask me. Otherwise, we'll wind up today.
Yeah.
Okay. Yes.
No, that is sorry, a non-financial banking. What is this actually?
NBFCs.
Yeah, HDFCs. Yeah. Okay.
NBFCs,
Yeah.
non-banking financial companies. So
Yeah.
they're
Okay.
basically, they
Yeah.
do perform many functions of banks, but they are not actually bank, right?
Yeah.
We-
Yeah.
they are they are companies or corporations which are also acting like a bank, but exactly they are not banks. So they do not follow all the rules and regulations of a bank as such, but they do
Yeah.
perform some functions of bank for which the central bank controls them. It
Yeah.
regulates. See, so
Yeah.
like what are the functions they perform? They give money, okay, but they cannot accept the deposit. This is one point. They cannot check. They cannot even issue checks. All these points are there under non-banking finance companies, right?
Yeah.
Okay, so that's it.
Yeah.
Any other doubt?
No, ma'am. No.
Okay,
Yes,
then
ma'am.
we'll end here.
Yeah.
See you in the next class. Okay.